Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
General advice disclaimer. The information provided is general in nature and does not take into account your personal objectives, financial situation, information. You should consider whether it is appropriate for your circumstances and seek professional advice from a licensed financial advisor. While every effort has been made to ensure the accuracy of the information, it is not guaranteed. It is based on our understanding of regulations and laws as at the publication date. As these are subject to change, you should talk to a professional advisor for the most up-to-date information. Any examples or illustrations provided are for illustrative purposes only and are not a guarantee of future performance. We do not accept any liability for any loss or damage incurred by reliance on the information provided. Any opinions expressed are subject to change without notice. Past performance is not indicative of future results, and all investments carry risks. Neither the hosts, guests, nor any affiliated entities accept liability for any loss or damage arising from reliance on the information provided. By listening to this podcast and viewing this presentation, you acknowledge and agree to these terms.
Good morning, everyone. I hope everyone is doing super well. Another episode of Wealth Coffee Chats here with me, Alex, all things financial planning, part of the 6-star team with the group. So looking forward to bringing you all the info, and thank you for being so engaged over the last couple of weeks. I can see a few people jumping on. Good morning or good evening, Kevin. Courtney, how are you? Hope everyone's doing well. So listen, couple of things. I guess I just want to start on the high point. And I'm not sure if anyone just getting up and maybe just seeing the news, but in the world of football or soccer, you should be seeing some great news that Ange Postecoglou has won the first major trophy for Tottenham. Not the best club, but it's a significant milestone for I guess sport in Australia. So he's the first Australian and Greek coach to have won this title. So super cool news. So I hope you guys, if you're into sport, you'd be all over that. Morning, Chris. Morning, Sanjeev. Scott, good morning. Thank you all for jumping on. Hey, look, over the last couple of weeks, I've been sort of chatting about the asset allocation and, and what it kind of does for you in terms of your investment journey, and how you should be sort of thinking about it when you're constructing your portfolio. So we went through cash, fixed interest, and I think now we're hitting what might be the most viewed or the most interesting topic out of them all, is around property, right? So property, I guess most of you guys would be very familiar with, and it might be your biggest asset that you own at the moment. So, but you'd be surprised to know that if you go through your superannuation or your investment strategy, unless you're directly investing into it, like your property portfolio and whatnot, you'd be surprised that the property allocation within your superannuation is actually relatively low. You'd be lucky to have sort of 20% allocation to that asset class overall, which is quite surprising considering that I'd sort of got some stats ready for this week. We've got the biggest asset class in Australia is residential property, right? So you're looking at $10 trillion. Then commercial side of the equation is literally 10% of that, or just above, at $1.3 trillion. So, and then the rest, the next biggest one outside of the superannuation savings would be your equities, which is something that we'll cover off in the next week, I hope. So, it's quite crazy, right? Considering that, it's the biggest asset class, you would think that proportionally you'd have the most of that in your superannuation, but in reality, that only really happens if you have this outside of super, whether that's in your personal name or a trust structure or something of that nature, right? So unless you have something like a self-managed super fund with a property sitting in there, then you'll likely find yourself with a lot of equities. And perhaps if you're with a industry super fund, you'll find yourself with a big allocation to alternatives, right? So after this podcast, jump onto your superannuation account and just have a quick browse as to how your investments are actually invested. And you'll be surprised to know that superannuation funds are actually quite active in the property, real estate, and infrastructure space. So, but typically doesn't form part of your property allocation. It forms part of your alternatives. So, many years ago, I used to work for UniSuper, and I know that they, for example, were investing heavily into road projects around Australia. So Transurban is the sort of an equity or a company that kind of deals in that space. And when they go out to build out these projects, they typically look for funding, and superannuation funds are the ones who kind of get in there and fund part of these projects, which is pretty cool. So I guess the other thing is with this asset class, even though it's a small component, there's a couple of pros and cons around it, right? The pros are that you can physically go to the destination where, most of the times, right? You can go to the destination and see where that property is. Whether that's a residential property, you can go down and view it, inspect it, and whatnot. If it's a commercial space, let's just say like a high rise in the city somewhere, you can go and you can see it as well. So there'll be a little sort of sign to say who it's owned by, and you probably will have a share in that building as well. From, I guess, structuring, I typically like to see property as a really good building stone for the end result. And when I say end result, is more for the retirement. Yes, obviously there's some instances when properties are great even into the retirement. However, the biggest Achilles heel that I can see with that is actually the liquidity part, right? So you might have a massive asset that's worth millions of dollars, but perhaps the income from that asset may not be reflective of the value, right? So then, when I have conversations with my clients, I always say, okay, well, great, you've built up all these assets. How are we going to convert them into cash? How are we going to cover your lifestyle moving forward, right? So if you have two properties paying you, say, $60,000, $70,000, $80,000 a year in income, no debt, great, right? But if the aim is to be earning or living off, say, $150,000 to $200,000 in income a year, well, you've got a significant gap there that you need to plug in. Hence why, the asset allocation pool is super important, because if you've got some cash, if you've got some other liquid assets, you could utilize them to help you with maintaining these assets for longer. So the other thing is, it's also very difficult to price property, whether that's commercial, residential, whatever it might be, right? Because at the end of the day, the value of this asset is only worth as much as the next person is willing to purchase it for, right? We had great news on Tuesday. What's today? Thursday? Yeah, Tuesday, with the rate cuts. So typically that's a positive thing for the property market, which is great, considering everybody invests into it, whether you invested directly or indirectly. And when I say indirectly, it's your PPR. Which means that the repayments are lower, which means that the activity should pick up around changeover of properties. And perhaps, if you your lending also should be improving as a result. So again, but these things, right? Like, even though like everything sounds great, it's going to give you that additional sort of purchasing power. It doesn't necessarily translate into the asset straight away, because again, the property is an interesting thing where, yes, on paper it might be worth $1 million, but if no one buys it for $1 million, then it's worth less. But if you go to auction, for example, and it sells for 1.5, wow, that's crazy, right? So that your valuation has been completely off track. So, which could be super important if it's, for example, held inside of super fund. But ultimately, it's an asset class that you can't really value on a daily basis. So, and when it comes to the portfolios that we design, typically there's what we see is a lag between what's happening in the economy and what's happening to the prices of these assets. So over the last couple of years, the interest rates were kicking up, right? So we had that rapid increase in interest rates over sort of the 13 months period. So therefore, the prices or the valuations on these assets have, in some instances reduced, because on paper basis, that's what happens. It's kind of like a very binary sort of transaction there, or calculation to get you to the result, because you can't price it straight away. It's a different story with equities, which I'll touch on next week, how this would apply to them. But coming back to, the portfolio, right? So what are the key things there? One, it's typically, a relatively secure asset, because you can see it. It doesn't mean that it can't go backwards, right? So there are some properties, some commercial property deals that don't do well, or they just stagnate. And, yes, great income, but no sort of relative movement over a longer period of time. Great from a cash flow, right? So residential, you're looking 3 to 4% sort of yield on that. Commercial, you get even more, right? So up to sort of 10%, depending on the commercial and where it is and whatnot. And typically low sort of outgoing costs, because with the commercial space, typically it's a 4 walls. They typically are also concrete, so minimal expense on that, and then the tenant tends to fit it all out to suit their needs, right? So, but then with the resi, you've got more sort of expenses there around, keeping the tenant happy. If something goes wrong, you have to kind of go and spend some money on it. But look, again, from your portfolio, great asset class, typically underutilized inside super, but personally probably one of the biggest ones that you could easily access. Second of all, income, so you get that regular fortnightly, monthly yield or rental yield from that property. And also over a long period of time, historically, it's done really well. So if you've got a strategy within your portfolio to have an asset class that you're happy to keep for 10, 20, 30, 40 years, you are likely to get a very good outcome at the end of it. In terms of the capital appreciation, you need to be able to obviously sustain that asset because it could be quite expensive. So with the commercial space, again, you've got your typical, you can go out and you can get the actual physical asset. You can get things through a managed fund. That means that you're just buying in the pool of other investors for an asset that is, quite large, probably worth several millions of dollars. So, you can buy a portion of that and then get a bit of yield on the way out. And also participate in ups and downs of that space too. So yeah, keep in mind property. Like, I don't want to dwell too much about it because I think a lot of you know what it is. I will do a summary at the end of this sort of mini series about the asset class and give you a couple of examples as to how we would potentially invest the client at different stages with what sort of allocations you would kind of look to have. Again, comes down to the risk profile. Typically when I speak to my clients, they always say property, it's safe and whatnot. But reality is, it is part of the riskier assets. So you have to be aware of the negatives around the two. But the positives are, historically have been great. You would have heard everybody else on this podcast talk about it, and it is a great asset class. You just need to understand what purpose it plays in your portfolio and how you can take advantage of it over a longer period of time. Again, it's not an asset class that you would invest in for a couple of years. Yes, you can get lucky. The investment can go up rapidly in value, like what we saw sort of over COVID around Queensland area, for example. Just using that as a very broad example, but those things don't necessarily happen at the same rate. Just as an example, go back and look at what happened in WA pre-COVID for 10 years prior, right? So would have been a completely different story. So, but if you held on for 10 years and then you held on for the last sort of 3, I think that's when you would have picked up a lot of the gain in that market. So again, from our perspective, we want to make sure that it covers off on, your objective, which is typically to grow your asset base and also make sure that it also provides income along the way. So you'll see in the next couple of episodes when I talk about alternatives, there are asset classes that don't actually do one or the other, and we'll chat about those specifically then. Again, in summary, massive asset class, underinvested inside super for most of the portfolios. Personally, probably overinvested. Great from an income perspective. Haven't even talked about negative gearing part. That's also another sort of benefit there that you could utilize. Steady income typically, and long term, it's been a great asset class. So, and not to say that it's one of the biggest, or is the biggest, I should say, in Australia. Trumps basically every other class combined. Something that you need to consider. Have a look at your super, like I said. Have a look at what you've got allocated there. You might not even have anything directly with property or infrastructure, but then look at the alternative side and see what the super funds are investing in there. So you might be very, very surprised as to what your money is invested in. So, all right, I think I've got Jeff here. Good day, Jeff. How are you? Thank you all for jumping on. Again, I just want to remind you guys, let me know if you've got any questions, any topics you want me to cover, in relation to financial planning. happy to share, stories, how we sort of deal with clients, what our conversations have been, or how we deal with these sort of things. So until next week, thank you guys. Thank you for tuning in, and until Thursday, see you later.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every